This is Pranav Rao from Smartkarma, and I'm pleased to have with me Jeff Zell to talk through his recent insight on the upcoming IPO of Medline. Jeff, thanks for your time today on the 10th of December. Could you briefly introduce Medline to listeners and share who some peers of the company are?
Yeah, thanks for having me. Medline is one of the biggest suppliers of everyday medical surgical products used in hospitals, clinics, surgery centers. Pretty much they're the backbone of the hospital system. They have a logistics network that can beat pretty much anyone across the globe. In short, Medline's one of those behind the scenes backbone companies that keeps healthcare stocked, running, and operationally efficient. And I know you wanted to hear about some of the comps to it. There might not be a direct comp to it, but some of the indirect comps would be a Medtronic. They're more on the implant side, or maybe an Aventor. They're more of an indirect comp on the chemical side. So those are some of the companies that analysts are kind of comparing Medline to.
Understood, thank you. What are the expected terms of the IPO, and what's your sense on demand and cornerstones at this time?
Well, over here in the state side, I'm a big NFL fan. At the end of every NFL season, there is a Super Bowl. So we're calling this the Super Bowl of the 2025 IPO calendar year. This is the largest deal of the year. The most recent IPO that was this big was in 2021, Rivian. They raised over $11 billion. So this IPO at the top of the cash, the raise, it's at $5.4 billion. Medline, they're offering 179 million shares at a $26 to $30 price range. About half of that deal is already accounted for through cornerstone investors on the cover of the prospectus. The likes of Bailey Gifford, Capital Research, Durable Capital, GIC, Janus Henderson. These are key names in the healthcare sector dedicated field that are anchoring this deal. Alongside that, there's a $250 million anchor order from the Mills family. They're the founders of this company. So some critical investors that are already on the cover, about half the deal is accounted for. It's a good start for this IPO.
Understood. Everything so far sounds fairly positive. What are perhaps some risks investors should keep an eye out for?
Well, a big risk, obviously, is the size. This company raising $5.4 billion at the top end of the range. It creates a challenge for not only the underwriters and the company to price this attractively to entice investors, but also they need to create an aftermarket appetite. Another big risk, this is a leveraged buyout, but they've never been public. So investors are really stepping into a story that has no prior trading history. There is a debt element to this company. They're using some of the proceeds to try to pare down that debt a little bit. So there's just a lot of different things, a lot of moving parts when you have a deal this size. There's 49 underwriters on this IPO as well. So there's going to be a situation where investors are going to be able to take a look at this IPO, be able to get shares, and it's a challenge for the underwriters and the company to price this correctly. Obviously, also this is the end of the year. There comes some timing challenges with that as well. So it's a big IPO, and on the state side here, we're really looking forward to it.
Understood. Thanks for the call today, Jeff. And listeners, check out IPO Boutique's coverage of US IPOs on Smartkarma and tune into our next Smart Call. Thank you.